with us. This is The Market. Let's take it straight then to a corporate voice. You've got Indo Count Industries, which has just recently completed the acquisition of the home textile business. They're also looking to grow their market share. Let's find out what kind of additional revenue we can expect and what the message is as well going forward in terms of business strategy. Mr. K Lalpuria is the ED and CEO at Indo Count Industries and now joins in on the show. Good to have you on board. Let's begin by talking about when we can start beginning to see the synergies of the acquisition that the company has made of the home textile business.
See, the synergies would really start beginning, say, 12 to 15 months later, because as we have taken the charge of the asset and we are slowly looking into more details and how the business is operated. And we will build on the synergies which are very visible to us because the same line of business, the same technological assets are there, and the customer base is also in all the developed nations like the US and Europe. So there are a lot of synergies which we will look into procurement, logistics, and various other areas. And we see that apart from the tangible assets, we will have many intangible gains as well going forward.
Just to, take that question forward, you mentioned that there'll be an additional revenue coming in of close to 1,300 to 1,500 crore per annum. So you're saying even that is going to take 12 to 15 months to reflect?
Yes, currently they are operating at 50% capacity. So they have a capacity of 45 million and they are operating at 20 million capacity. So we intend to grow that slowly and add new customers and also grow the existing customers. So it will certainly take that much of time to scale up the operations as well as, utilize the capacity way forward.
Mr. Lalpuria also wanted to understand, now that you've become the world's largest home textile bedding manufacturer post the acquisition, what is the market share that you're looking to capture and what is it that you are currently sitting at?
See, the good thing about it is that India is very well positioned and India already has a good market share in the home textiles market globally. And it is growing at a very reasonable CAGR of almost 9 to 10%. So basically in the US, we are today having almost 15% market share on the sheet side of the business. We intend to grow the fashion bedding, utility and institutional bedding, where India overall has very low market share. And that we intend to grow substantially in the time to come as we are establishing both the back end as well as the front end. Also, what we hear about all the FTAs happening like for EU, UK, Canada, Australia and the UAE. The UAE and Australia are already happened as we speak and the details are being worked out. So I think all these FTAs will help us grow substantial business in these areas as we will become level playing field with all the other competitors. And so we are looking at a good market share in Europe too, where currently India has only 4% market share, whereas Pakistan is having 20% market share. So as a company, we have a good base in the UK as well, where we are currently at 10% market share. We intend to almost double that in the next 3 years. So these are the areas where we would focus and we will have a substantial say because the scalability and the flexibility of the capacities and the capabilities will provide us equal opportunities. And once we are at level playing field with the peer countries, we'll definitely gain market share in these areas.
Also, Mr. Lalpuria, how long will the integration of GHCL's home textile business take and whether or not there will be a dilution in the margins in the near term? And then thereof, where is it that you see the margins settling in the longer term?
See, the integration, as I spoke, it will take around 12 to 15 months to happen fully because they are at a 50% capacity level. So we have to sell that capacity, which we are confident that we would be able to do so. Secondly, on the margin side, also we need to relook at the positioning of the product as well as the customer base and see that how we serve our customer better. with the kind of product portfolio, with the kind of service level where we have demonstrated at Indo Count, I think we'll set that culture up within GHCL as well in time to come, and definitely that will provide us an uptick onto capacity utilization and thereby adding on to the revenue. And that's what we anticipate, like in the next 2-3 years, we'll be able to scale up the revenues, which are currently at 800 crores with GHCL, that we will scale up to almost 1500 crores in the time to come.
Good morning. This is Nantan also joining in. So that's as far as the big acquisition goes, which you in the past have said can add about 1300 to 1500 crore rupees of revenue. But would love to get an idea from you as far as demand goes, because you have big markets as far as the US and the UK go. How's demand, and how are you striking the balance between making sure demand doesn't go away and inflation?
See, we all know that home is playing a center stage to our life and lifestyle, and all products which are being consumed at home has shown an uptick in the last year, like FY21, and in FY22 also to some extent. Only the the third wave impacted to some extent the larger markets like the US and EU. Otherwise, the demand is intact. The US economy, of course, is facing an inflationary pressure, which we feel that should, by this end of this year, should slow down. And I think the demand will move up in both this market, like Europe as well as the US, simultaneously as we move forward. And certainly with these FTAs, I think there will be a new markets which are opening up. And India is very well positioned as far as the supply chain is concerned towards the raw material and the labor supply. So I think with all these factors, with the positioning of India as a country, with the positioning of our company, with the kind of scale and flexibilities which we have invested into technology, digitalization, and the servicing the customer at the front end with distribution base, e-commerce, etc., will definitely help us gain market share. And the demand also, what we see going forward, is slowly picking up. And we had seen that we have faced the first wave and the second wave, and the demand has revived. So I think going forward, the demand will be intact as home has become the center stage and home textile is doing extremely well.
Now, when it comes to the fashion bedding segment, China is the market leader on this planet. Can you share with us what your plans are, especially when countries, buyers, brands are looking at a China Plus strategy?
So we have a clear-cut strategy to remain in the bedding side of the business because that is the larger share of the pie. And that's the reason 4 years back we have started investing into this business in terms of both man, machine, money. And we have seen results coming in where, as we speak, we are 19% of revenues in our total revenue when you correlate to fashion, utility, and institutional bedding. Going forward, as I said, that home has become the center stage and people are upgrading their homes. They are using better product. They are more aware about the health, hygiene, and wellness factors. And since we also are connected to the wellness factors, because sleep forms an important area in the wellness factors, just like food and fitness. So I think there are opportunities wherein, we can tap them going forward. So certainly you see this will help us gain more share as compared to China, which is losing market share due to the China plus one strategy, where brands and retailers want to de-risk their business to other countries as well, where China was dominating. So I think with the cotton coming out from the Xinjiang area also is a big blow to the Chinese textile segment. So I think with all these factors, China is slowly losing the market share and India stands to gain. And as I mentioned earlier as well, like the global textile trade is almost 1 trillion and China holds 35% market share. India holds just 3.5% market share, and 1% market share shift from China is around 10 billion. So that's the scale of things which we see in the near future where India stands to gain, and our company will definitely gain this. And in order to substantiate this, we are building up the back end. We are investing into facilities where we can service the customers very well. Also, we are building up the omni-channel presence in the US and in other markets like UK, wherein we can service the customers with speed. So I think with all these initiatives, definitely we will stand to gain in the coming years more market share on the fashion and utility side of the business.
We'll let you go on that note. Thanks very much for walking us through how business is shaping up as well as the outlook
Thank you.
on the GFC acquisition.